Good evening, everybody. Happy Sunday. I hope everyone's having a wonderful weekend. It is February the 13th, and it's about 5:30 here in Toronto. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview for the week. So before we talk about next week and what we think is going to happen next week, let's talk about last week, because Thursday and Friday we saw some aggressive pullbacks to the negative, both of which were primarily fear trades more than anything else. And we'll discuss that a little bit more. And we'll also talk about how to be able to tell what is a fear trade versus an actual pullback in the market. So if we take a look at what happened Thursday, it's actually because of the Fed, which discussed interest rates and how they're going to be a little bit more aggressive in fighting inflation. Now, the markets did not like that at all, especially the NASDAQ, where we know that much of the NASDAQ is very interest rate sensitive. And that was a pullback on Thursday. However, if we take a look at what happened on Friday, a little bit of a different fear trade. And the fear trade is actually due to tensions overseas between Russia and the Ukraine. And escalating tensions there. Not really sure how much of an escalation there really is. I'm not over there, so I really don't know for certain. I think a lot of it is overrated and overinflated. But for the most part, that is part of the fear trade that happened on Friday. Actually, that is the majority of the fear trade of what happened on Friday. Now, how can you tell it was a fear trade on Friday? Well, one of the biggest indicators is that the 10-year yield actually dropped. If it was an actual pullback, that wouldn't have happened, especially with the US dollar skyrocketing and the markets kind of pulling back. I'm not going to say crashing because it was far from a crash, but just pulling back. So that's how you can generally tell. Now, obviously, there are some exceptions to the rule, but in this case, especially this case, it's a clear textbook example of a fear trade. But let's talk about what's going to happen this week. So I think in the early part of the week, we may see a slight bit of positivity. We may. And that's only because there are people that are now going to jump in and try to buy the dips at this point. Now, are they wrong? Not necessarily. But that could be a reason for a possible uptick. Now, volatility is still going to be exceptionally high. And as I've mentioned before, that is probably going to be the trend for the vast majority of the year. And I'm not just talking about equities, I'm talking about right across the board. So we talk about precious metals, commodities, in general, cryptocurrencies. It's not going to make a difference. Volatility is going to be a major component of the markets this year. So let's talk about what exactly could happen. So as I mentioned, we may see a little bit of pop, but the reality is the fear trade is probably still going to be there to a degree. So even if we do get a movement upwards, the volatility may cause it to pull back. What I am watching for very specifically is whether or not the 10-year yield starts to spike. Any spikes in the 10-year yield, now I anticipate it should be around the 2% mark at this point. And I think that might not actually be too bad for the market, although if you've asked me that in the summertime, it might have been a different situation. But I think right now, everybody's pricing in about a 2% 10-year yield. But if we see a spike, a 4, 5, 6% spike like we've seen recently, that may be a cause for concern or alarm, or at least an indication that the markets are in a position of fear, not fear trading, but an actual pullback. And that might not be so bad in the current environment that we're in, only because since the last lows that we've had, the markets have pretty well gone straight up. Now, a little bit of a pullback here would help calm the markets down, and it's actually quite a bit of a bullish position. However, that being said, the 10-year yield spikes are one of the major areas that I'm looking for. The other one would be any kind of pullback in crude. Now, if tensions in Russia or between Russia and Ukraine actually escalate, then I'm going to anticipate that not only is that going to be excessively bullish for oil or crude, I think it's going to be excessively bullish right across the board for all energy. It's going to be excessively bullish for commodities right across the board. So for the most part, I'm thinking in that direction, and I am currently positioning my portfolio for those possible events. Now, taking a look at cryptocurrencies, I think cryptocurrencies still can't seem to find a lot of momentum to the upside. That doesn't mean I'm not bullish on them on the year. I'm just saying that right now, there may not be a lot of positive momentum to the upside. Now, if the market does correct due to escalations in Europe between Russia and the Ukraine, then we can probably anticipate that cryptocurrencies will move to the upside aggressively, in addition to, as I already mentioned, commodities and energy. Now, other than that, I think for the most part, what we're probably going to see this week is cryptocurrencies are going to be volatile. They're probably going to sit between the $38,000 to $45,000 mark for Bitcoin. I do anticipate that gold will continue to sit over 1,800. Silver will bounce around between 22 to 23 and a half, or sorry, 22 and a half to 23 and a half. I'm not too sure there's enough bullish momentum yet for silver to the upside, unless we see something, as I mentioned, escalate quite significantly overseas. But for the most part, I think that's where we're going to be. I think equities will see a lot of volatility this week. Ideally, I'd like to say that the markets will probably end on a positive note. But the truth of the matter is, the way the markets have been going, we may start off very positive, but swing 300, 400, 500 points in the opposite direction. So overall, high volatility. Nothing too positive one way or the other, more negative than anything else. That's it, everybody. I will see you daily in the morning before the opening bell.